Audio morning brief for the U.S. grain markets. It is 8:10 a.m. Eastern Time, February 21st. I'm Rich Paz for Critical Point. In the corn market, the downtrend channel, I'm using a 5-day moving average as the resistance line instead of drawing a line, working very well. The funds just keep selling near that moving average. And it's quite possible others have caught on and taking that more serious here. We're broadening the group that are using that to sell. So yesterday they bounced it to the 5-day average, eased it back, but actually closed it higher for the day. That was interesting. It really wasn't much selling. Overnight, they bounced it to the 5-day average, starting to sell it again, but it's in the area of the open and close of yesterday. It's actually still hugging near the moving average as though it's not too sure. They haven't hit it yet. They may be waiting for the day session and then go ahead and get serious about dropping it. Now, I'm convinced we probably put in a level 4 bottom yesterday, bounced it into a level 4 top today or tomorrow, so it can stay up for a little longer. But I'm concerned as we go into the end of the week, there ought to be another level 4 setback. Since it hasn't bounced that much and we can draw a trend line over across recent days for support line, we do have to consider as we go out towards Friday, support might be as low as 407. Meanwhile, the downside targets that I have, and those targets for the moment, I've revised it. I'm only going to believe in those targets if it goes below yesterday's low of 414 3/4. That was originally 413 to 411. I'm now going 413 to 408, and I might as well throw in the trend line and put it on down to 407. All right, we're still looking for a level 3 bottom. It's weird, it's fuzzy, it still feels weak. It just really is no good demand here whatsoever. The sellers are actually being kind. If they wanted to, they could crash this market right now. That's how vulnerable it is, okay? But I feel as though the sellers are also kind of tired of this. I think everybody's just tired of this game. They've had enough of it for this year, okay? But more so the buyers than the sellers, unfortunately. At any rate, if we can get this market to close above 5-day average, it's a positive development. And if it closes above yesterday's high at 421.5, I think we'll have significant enough information that the market is staging a level 3 bounce. And I think it's not going to top out till next week. So I don't think it's possible it tops this Friday. So that means what? A 2-day pop here and that's it. Okay. 3 days if you include today. That may be all we're going to get, but I think it could be a little stable next week. Now, another interesting thing is I think there's a possibility this level 3 top is not going to matter. If it's just a small up move, what we may see is it comes down only for a day or two into a level 4 bottom, does not violate whatever low is set from now into early next week, and then moves above that level 3 top. And what it is a sequential flip when the market failed to even stage a level 3 downtrend. It's just done and over. That would be an excellent sign of exhaustion of selling. Now, that's just a what-if scenario. I'm probably just gambling here. We don't know if that's going to be the case or not. And the model isn't forecasting those kind of things. It's just simply saying we ought to be putting in some kind of floor price for a while here. There ought to be some stability here, put it into this downside. As at this moment, you can just see the trend is still intact. It's still down. There is no evidence of a bottom. And I think some people now so disgusted, they want a lot of upside before they're going to say there's a bottom. They want it to stay up for quite a while before they say it's a bottom. And the reason they're going to do that is they're hopeful that kind of change in price characteristic will also relate to we finally got some bullish news. So unfortunately, this means the demand may not step in. They may have given up, and instead of trying to keep jumping in and out and picking those lows, they may just say, I'll start over when you put it up quite a bit. Call me then, otherwise I'm done with this. Well, that sounds more like the speculative mentality here in the funds. Commercials, farmers, they have to deal every day with this, and the related brokers. So I think there's still going to be a group out there trying to pick bottoms, but there's also a group out there that's willing to sell these little blips up until they lose. And that's the mentality. That's what we're stuck with. All right, I've given you some downside potential. On the upside potential, if it will take out yesterday's high, even though I have a potential target of 426 on up to 430, I think we ought to widen that to about, say, 423 on up to about 430, okay? And that's all I've got for you. I won't talk of the larger trends here. We're kind of just a neutral, watching and hoping to put in some kind of significant bottom and move this higher into summer. Now, the soybeans are behaving much better. And for some reason, I thought they might be the sluggish ones into March even, or even if it bottoms this month, it might be sluggish to get started. Now it's like they flipped and they like the soybeans, they like the wheat, they don't like the corn. And I think that's a mentality of funds. Some of them just, especially the hedge funds, if they're buying some grains, they probably have to sell some other grain or some other commodity just by their own rules. Maybe that's part of it, don't know. But what I do like with the beans, until it takes out last week's low, the level 3 trend is up into next week, okay? And it can even be late next week into early following, all right? The upside has already met some of the minimum upside objectives, unfortunately, but we do have objectives that go as high as, see if I can see that, about 1205 for the March beans, okay? So I think there's a chance of moving up here. Yesterday it bumped its head on a trend line, backed off, closed below it, but they didn't hit it. Now today they're hitting it on the overnight market, but it looks like what this is a level 4 downswing that ought to end today. So I think the market will be back up tomorrow for the level 4 interweek swing. Now we just got to see how hard they hit it today. If they take it all the way back towards last week's low, it's still then we just saw a knee-jerk reaction, meaningless trade. The trend is still down. But for the moment, this market is trying to fight. It's trying to claw towards breaking of this downtrend in the last few weeks here, all right? And what would be a clue that it's winning and getting the job done is trade above yesterday's high at 1188.5 March soybeans. Then I think we have an opportunity to move higher next week or portion of next week and move higher to that 1205 or whatever. Now, another thing I told you yesterday was a tiny little gap. You could barely see it. I think they're trying to fill that today off this level 4 swing. Also, the market closed above the 5-day average. Hasn't done that for quite a while, or at least by a fair amount anyways. And it's pulling back to test that 5-day average. It's filled that gap. It's coming back to the close on Friday. And the 5-day stochastic I use is still bullish. It's not paying any attention to the amount of decline overnight. I like that. I want to see it continue to reject that. It has a wide enough spread to suggest there is a chance, but not high probability, but there is a chance to have upside momentum next 1 to 3 days. And if that's truly a level 3 bottom, the model is saying, well, yeah, I ought to do that. In fact, I ought to do more than that, okay? So I really like these beans, okay? I like them better than the corn. The wheat is up a lot, so I like the wheat momentum as good or better than soybeans, but I think I have more faith in the pattern in soybeans than the wheat even, okay? Any rate, here's hopeful. What we're also looking at is a ready, set, go pattern, meaning last week's low and the rally was the ready, and then the set is today's setback. And if it can keep from taking out last week's low and then rally above yesterday's high, that's the go. That's the trigger. So my guess is computers, anybody's been looking for bullishness, their computers are probably going to put buy orders above yesterday's high, stop orders, or the computer may have its stop not actually enter the stop. It'll just simply make a market or limit order and pop it in there. And it's probably limit because hardly anybody does markets anymore. All right, any rate, I like that pattern. I like that setup. I got to give it a thumbs up, but I can't give it a 2 thumbs up to be bullish here in soybeans. And then the major trends, you can just see all 3 markets can put in a floor price from now into summer. They can put in important bottoms here, level 2, level 1 trends, okay? But it's still iffy. We're still it's like a gooey mess out there, okay? Somebody ground the grain and then dumped a bunch of water in it, and now they're scratching their head saying, what do we do with this mess? Can we cook it? Can we dry it out? Just wonderful times, isn't it? All right, at any rate, I do think there's some reason to be a little bit optimistic. The beans might be dialing in Brazil and Argentina, and there is a few private sources that come in the last 48 hours here and reduce their bean production by a couple million metric tons even, but I don't think it's anything significant. And there is discussion that the farmers in Brazil might have actually planted more beans than everybody thought. and then that'll offset some of this dryness and tempering of the yield, and then therefore we wind up with still strong production. It's going to be good. It's going to be good supplies no matter what. And China's going to favor South America over U.S. no matter what. All right, but we're still all going to do business. The wheels of commerce are going to turn. The world's moving forward. There's no end to scenario unless somebody blows up the world. Okay, so at any rate, now let's go to the March wheat. So last week's low is for the moment, all I see is support. If it goes below it, we'll have to go back and recalculate. So make sure you're ready to calculate yourself, because I may not update you enough. But otherwise, I got to give the beans a chance. Now, wheat. Big explosive run-up of wheat. So proud of wheat. Now, you might look at it and come to the conclusion, and let me double check because my chart is a little bit odd here. I was thinking the March went to a new low. And let's see, I have a low of yesterday of 555.25, and then I have a low on November 28th. Yes, it went below it. That's what I thought. Okay. So, oh, wait a minute, let me double check on the 27th. Yes, it went below it. All right, here's the thing. On the daily chart, even weekly charts, in other words, the individual March chart, it took out the November low. So you would say, uh-oh, the model's wrong. No long-term bottom last year. We have not started a long-term bull market. No. Be very cautious of that. What has occurred is you need, when you're especially interested in long-term, you need to also look at the continuous chart. I realize everybody teaches you, pay no attention to continuous charts. You got to do individuals. Well, that's okay when it comes time to trade and to wrap up your analysis, and especially if you're looking at intermediate to short-term to very short-term trends. But you start moving towards those intermediate to long-term, really the continuous can be the better clue of what's going on, because sometimes you'll put in a long-term bottom, you get a big run-up, then it just kind of roads some, but you look at the individual charts and it actually went below its long-term bottom because they took the carry out and they didn't violate the long-term bottom in a continuous. So it's just a sluggish market. Well, that's what I think has occurred. They took out the long-term bottom on the March contract. On a continuous chart, they have not. And on a continuous cash, in my opinion, it looks good to me. It looks good. Despite all the crap we've gone through, it looks good. We're in a long-term bull run for a little while, at least, hopefully into summer. All right? So until it does violate last fall's low or last year's low on that continuous, I have to assume this is a bunch of nonsense of putting wheat down below its lows of last year when you look at those individual contracts, okay? They're just taking the carry out. But I say nonsense, I got to be careful of that. It is a sign, though, that what's going on is the market's moving sideways, and it's moving sideways for so long that they take the carry out, the individual contracts can be weaker than the continuous chart, okay? But that is a sign that we're going nowheres on the demand supply area. We're not getting anywheres, and then just the general mechanics of math are eroding these prices. Again, a sign that we could use some better demand here. It's not necessarily a supply issue on wheat. I don't see that, all right? I don't think they're trying to truly pound it up. I realize you can make a statement that it's been down since December, but at any rate, what the model's saying is this ought to be a level 2 bottom. We're going with the momentum and call it an SOS, a sign of strength. It's an SOS to the bears, okay? And if you draw a trend line from about December 26th and through the low of, say, January 30th, extended out, you can see it bounced off that trend line. Now, maybe you don't particularly care for that, but you ought to take a look at it. Indicators have turned up, and the indicator is immediately trying to spread, that stochastic indicator, my favorite one. I think there's a developing chance we struck a nerve here where they sold too hard and fast last week and saying, oops. And someone also said, and this may be the cash people, the flour people, said, we got to get some wheat. Okay, get out of my way. I got to get this done. All right. So I think the trend is up into next week for wheat, but it's also so volatile. I can see that it can backfill, it can stall out, it can give us some other issues. So I don't know if it's truly going to follow through to the upside, and it's already met minimum price, but hasn't met the time for a level 3 top. So I assume it's going to stride towards the maximum price of, say, $6 or a little bit above it. It may come in, though, in the 590s or something like that. I don't know how well this is going to be, but there's a possibility we found a level 2 bottom here. And I realize for the March, we should call it something different, but on the continuous chart, it fits, it works. And there is a chance we just found a floor price now into harvest, at least for first crop wheat. We may find that it was a floor price into summer. We may find this is also a clue. Soybeans and wheat are working on floor prices into summer. News around the world, still nothing there. The global economy is still way behind the U.S., but it's gaining momentum, I believe, okay? And I think people eat more as the time goes on here. I think they'll feel more comfortable paying a little firmer prices here. I think inflation's not going to be a big driver to hold commodities up. I think the commodities people will be scared to death that inflation will just cause prices to be too high and hurt the demand for these commodities. And so it's going to be a sluggish thing here. China's going to be holding us back for quite some time. But I still don't view it as an end of world scenario. I don't view it as a reason to be bearish commodities nonstop all this year. I think we can still have that seasonal up move and somewhat of a +1 long-term up move in all three markets into summer, okay? And the question is, a small move is a huge move, is somewhere in between, and that depends on the fundamental story. And we have fundamental stories suggesting it may not be a crop problem this year, there may even not be a weather scare, but there can still be some lift according to just normal cyclical and seasonal supply and demand. But we can also come up with stories that we could still get a crop problem, and then it's debatable. Is it minor? Is it major? It's all over the map, unfortunately. But what I will say is I doubt we're going to see record high prices out of any crop problem this year. I think it's just going to be a nice retracement higher and over. But I think there's far more upside price change than downside as we look out into summer. There's far more possibilities there. And I think the news has been with too many bearish surprises, even though most of them I think have been rather subtle, but there's been so many of them that just odds would dictate to be a bit of a contrarian, and soon we're going to get more bullish surprises than bearish surprises starting sometime now in April, and then more so into the summer months. So let's keep an eye on it. I don't see the dollar impacting us either way here, frankly. And again, it's a lot about South America and their crop, but I keep thinking, seems like we're pretty close to dialing in that. And I took just a quick look at Brazilian futures prices and China futures prices, and then I took a quick glance at just some of the chat on basis in those countries. And it just feels like there's a little bit of stability, a chance support here. I like how the charts look for those markets, that there's a chance for a little bit of lift in coming weeks for those markets. And since Brazil's going to want to remain a competitor, if they're going to raise their prices, it must be because we're also going to raise our prices. And yet they may keep their prices from rising as much as ours. I don't know, or we'll keep some kind of spread difference there. I don't think this is going to be a great move up here for another 30, 60 days, but it just feels like it's time for some stability and some lift in these grain markets. Past results are not necessarily good indicative of future results. Have a great day. Thank you.